Hey bros, and this is what up. In this video I want to talk about another pattern, but as usual, uh, the way I teach you is much different than those old classic definitions. And uh, when you hear about, for example, head and shoulder, you see you say, okay, there's a right shoulder, left shoulder, and there's a head, and it's a reversal pattern, and the target is as high as the destination between the destination between the top of the head and the neckline. Yeah, that's true, but the point is it's not just reversal. At some point you might see it as a resumption and continuous pattern. But let's start with that old classic definition, because this course is supposed to be thorough, and I don't want to miss any point. Okay, first of all, let's find the head and shoulder. Generally, if you see a head and shoulder at the bottom of a trend and at the end of the trend at support resistance areas, it's probably a reversal. But if you see it as a, I don't know, at the middle of a trend, it's a resumption pattern. This one clearly we see a head and shoulder. Let's draw it with this one. Okay, this left shoulder, right shoulder, and head, this neckline. And let's see, your target would be as high as this, the top of the head and neckline. You measure the destination and copy paste it. Okay, as you can see, it definitely hit the target at this point and hands down. And just right after that, we see another head and shoulder. That's really funny. And if you consider this as a neckline, yeah, it's clearly hit the target. And then another one. You see them a lot, you know. You see them a lot. They are almost everywhere. We call this head and shoulder bottom because you see it at the bottom, and after that we expect to see a bull reversal, and we call this one a head and shoulder top. You see it at the top, at at top of a trading range, at top of a channel, at resistance, whatever. And if we measure this target, yeah, oh my god, I missed it. Yes, right here. It's hardly, it took a while, you know, to evolve into a trading range, but it eventually hit the target. And there's another way to determine the target, which is you measure the stop loss, the risk. The target is usually twice your risk, and if you consider this one as your risk, below this shoulder, just copy paste it. Yeah, it makes sense, and hit the target. Okay, But I want to show you failed head and shoulders, it happens when it doesn't go up and it just hit your stop loss instead of hitting your target. It hits your stop loss. In this case, we consider it as a trading range, and as you know, in trading range, the chance of breakout from each side is equal, and there is 50% chance. But in head and shoulder pattern, we expect to see a reversal, let's say 75% of the time, and there's just 20% chance of failure. But we want to find out and find some example of that 25%. Check this out. We have a pattern here, a saddle, left shoulder and right shoulder. We got it at the end of this bear trend and head, and as you can see, it didn't hit the target, but also it hit your stop loss. And but when it happens, when you see it here, the chance of bull breakout reduces, and here at this point, if we imagine that we don't have this data, so we don't have any idea what will happen after this candles at this point, there's 50% chance of breakout from each side. So as you can see, we have a bullish breakout, and the reason for that is the bears, they decided to make another leg, and the buyers, they didn't have enough power, or they didn't consider this price as a fair price to buy. And also bears, they didn't consider this price as a point, as a fair price, so they can take profit. They wanted to, they took profit, but they decided to go further and go lower. So it's a failed pattern. I will show you other examples on this failed patterns. Check this out. It's not a failed pattern, but I wanted to show you. It doesn't hurt. As you can see, it's a reversal pattern here. It didn't hit the stop loss, so it worked.